Okay, welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and I teach my proprietary Safe Wheel options trade for free. And the system is currently down 2.2% year to date. Where are we? Middle of March. Okay. Um, Please type in the chat that you can hear me. Let me check my chat here in the comments. Also, make sure that you ask any questions that you might have in the chat to make sure that I can get to those questions before the end of the broadcast. So let me just make sure you guys can hear me before I kind of move forward. Let's see here. Hear me great. Okay, thank you, Walter and Will. All right. So on the earnings edge, what happened last week? Thanks, Tron. Well, there was nothing that fit through the filters. The filters are pretty stringent, and the filters just didn't give me anything to trade. A lot of the volatility, when there's a lot of volatility where the volatility is high and it might come down, that's typically not a good scenario for the earnings edge. What's really good for the earnings edge is when the volatility is low and it goes higher while you're in the position. So there's a filter that kind of looks at that, and that was one of the main reasons why last week did not do an earnings edge trade. Now, overall, earnings edge 27 wins, 15 losses, 5 break evens. And since I started my new exit criteria, the record is 6 wins, 7 losses, and 2 break evens. So about a 50-50, which is what I expect. And since the 6, 7, and 2 record, my average loss is $402, average gain $742. And in 2022, this thing did 63%, and that's before fees. After fees, it was around 28%. And in 2023, so far, we're down 23%. And I remember last year, we had a similar run where I hit a few losses in a row. Okay, and there's a link in the description if you're interested in getting involved in that alert system. Next, Premier Level 5. Let's get into that account. You can see my P&L right here. This is something where I don't think you can see P&L anywhere else on any other instructor on YouTube that actually shows their P&L, not a spreadsheet, not a P&L every other day or every once in a while. I'm talking, real P&L right here. If you guys see anywhere where you get that P&L or you see someone showing their P&L like this, please shoot me a message. Usually I get pretty much everything whenever you guys do a comment in one of my videos. I'll see that because I would really like to see someone showing their P&L like this. Okay, Premier Level 5. Now this year, or last year, this thing did 15% annualized with a maximum drawdown of about 4%, while the S&P was down 20% at the end of the year. So we started this account with 33,583. We're currently at 33,140, let's say. 35,140. So far, this particular system is up 4.6%, which is what I expect. I expect it to outperform the S&P. The S&P is only up 2.4% year to date. And this has much lower drawdowns. It's kind of difficult to get the drawdowns with trading futures. Thinkorswim doesn't have a very accurate picture of the drawdowns with that. But I'm going to be starting my mastermind soon. We're going to be trading the Synthetic Dragon Black, and I'm going to be sharing my P&L. And it's going to be with a $200,000 account, and we're going to be trading SPX. So I'll be able to share, the real drawdowns with that because Thinkorswim or TD Ameritrade gives accurate numbers with SPX, but it don't do it when you trade options on /ES. So I look forward to that in the mastermind. And by the way, my mastermind is closed. I've already capped out the amount of students that I wanted to get there, so I get them one-on-one training. So that's closed already. But I am going to do another mastermind coming up for this Premier Level 5. And I haven't determined the details of that yet, but you can go to my website, or there's a link in the description here, and you can see just some of the aspects of that program, but I haven't got the details down on that one yet. Okay, let's talk about the safe wheel. Safe wheel, we're trading Uber. I hadn't even really looked at this thing. Okay. Usually I take a look at this before I do the live stream, but I haven't even looked at it yet today, except for I did look at the P&L and do the calculations on it. So with this safe wheel in 2022, it did 21.7% return, and the largest drawdown from peak to trough was 4.8%, of course, with the S&P down 20%. And in 2023, this thing's down 2.2%, and the S&P is up 2.4%. So we are underperforming a little bit this year so far with the safe wheel. And of course, the safe wheel is 100% free. I do live streams and I show you everything, and I answer all questions about it right here. Also, there's in the link in the description if you want to get kind of the fast track. You want to see every possible scenario with a safe wheel, not just the scenarios that I've encountered. There's a link in the description where you can get this system. All right. So let's talk about what we're going to do next. So looks like I still own 100 shares. Last week I sold a put and I was hedged. So the hedge, let's talk about the hedge first. So this hedge here, I don't want this to be under 100 days, and I want it to be within 70% of the price of Uber. So currently Uber is trading 31.96. 31.96 times 0.7. So 22. 23. So this put hedge needs to be at least at the 23 strike. It's well within that range, so it's close enough to the money to protect me. So this hedge is really good. It's solid. There's no reason to do anything with it. Okay, so now that we have our hedge in place, we do the traditional wheel. So this wheel, you can see that I was assigned, I think this was 2 or 3 weeks ago, and I was assigned at 34. So what I want to do is try to sell a call at 34 or higher. If I sell something, let's say I sell a call at 33, well, that gives me the potential to lose money, right? Because I paid $34 for this. So I don't want to sell it under my basis. So let's see if I can sell a call at 34, do a covered call at 34 or even higher. It's better to do it higher out of the money, but 34 would be my line in the sand. So let's take a look at that. Now, I want to do all of my trading, except for my hedge here, all of my trading in my nearest expiration, the one that expires this Friday, because that's where I'm going to get the most depreciation. I'm trying to get depreciation when I sell things. So 34 call, here's my calls, 34. See, I can't get, so I want to get enough premium. I want to get at least 34 cents, and I'm only getting 12 to 15 cents. I can't get enough premium. So I'm kind of stuck, right? I'm stuck in this position. So what I'm going to do is I left enough margin and buying power availability for 2 positions. Okay. So the second tier, I would call it, I don't have enough buying power for a 3rd tier, only a 2nd tier. That's the way I designed the system. So the most ever I'll have on would be 200 shares. But right now I'm going to start the wheel over as if I don't even have those 100 shares. I'm going to sell a put. And I want to sell the put for more than 32 cents. I'm trading around $32. So I could go to the 31 or the 3150 or the 32. Um, Anything that's out of the money and I'm getting greater than 32 cents. I'm going to go with the 3150. Get a little aggressive, take a little more premium here. Now, as far as sizing, one of the things that's interesting is that whenever you a lot of instructors, I mean, almost everyone, not a single one, well, I can't say not a single one, but most of them don't talk about sizing. And I think sizing is like a very important key element when you're trading. I mean, it's like one of the most important things. And we're going to talk about sizing right now because I have between $5,000 and $10,000. I will trade one. Uh, I will sell one contract here, and I will have three hedges. If I had 10 to 15,000, I would do two of these contracts, and I would do 6 put hedges. So the sizing is all predetermined. So since I'm between 5 and 10,000, I'm going to do one contract, and I'm going to go to the 3150. I want to get as much as I can. See, the mid price is 50. Maybe I can get 51. I don't know. But I'm going to do one. I'm going to sell a put. I'm basically starting the wheel over as if I don't have those 100 shares that I'm holding with my put hedge in place. Okay. Okay, so filled at 50. So I collected 50 bucks. Last week I did the same thing. I don't remember how much I sold it for, but whatever I sold it for, say it was 50 bucks. I just kept that money. I didn't get assigned, and the premium just went into my account, and now it's there permanently. Okay. One more thing I have to do is I have to protect my hedge in case Uber just shoots up to like $45 or $50. And the way I do that is I buy something around $5 or $6. I might be able to get, I buy a call worth around $5 or $6. The 35 looks like I might be able to get it for $6. I'm going to do one of those. Maybe I can get it for 6. I don't know. We'll see. Okay. Yes. Okay. So there's my trade. Basically, I'm doing the wheel and I'm doing a second tier. And just kind of pretending like the first tier doesn't exist right now because it's not giving me any premium. And just dealing with a second tier. Okay, so that is the trade, or what I would do for the safe wheel. Now, let's see are there any questions about the safe wheel and what I did today? Also, while I'm waiting, maybe someone has some questions. Make sure to follow me on Twitter at KarlDomm, KarlDomm. And don't forget to hit that like button. It helps the channel grow. It helps out a lot. When the more people that are watching, I think the more people I can help. And I think the more people I can help, the better this whole online education industry is, because I want to help people in the right way, which means showing my real P&L. I want everyone to do that. So the more people that do that, the better off everyone's going to be. The less people will get ripped off, because I think a lot of people get ripped off in this industry. Okay, Tron. I know you like to set it and forget it, but last week there was so much volatility that I sold a put and also sold a call. My shares ended up getting called away, but it was for a profit. That's excellent. Yeah, so I probably, this $34, I probably could have sold that last week, or the call, and made a profit, and possibly got called away like Tron. And that's a great idea. And if you want to be more active, then there's nothing wrong with that. And this system can still apply. You can just kind of tweak the rules the way you want. If you want to be more active and look at it every day and make a decision every day, there's nothing wrong with that at all. I like to be hands off. Like I said, I didn't even look at this thing until I came in today, this morning. So I didn't even know whether I was assigned or what happened. So that's the way I like to trade, just hands off, because I like to do other things. A lot of times I'm doing research and back testing, but that's what I like to do. So over the weekends, that's what I'm typically doing is back testing a lot of times, just figuring out new systems or how to tweak my current systems. Walter, do you really need the $5 hedge when you're naked long? Yeah, not really. I don't. But that seems to be, or that this is where this system tends to capitalize and make the most money, and kind of like we where the system ends up creating profits for the year. Like this is the time to make money when we're assigned. So I don't want to block that at all. I want to take this 100 shares. I mean, it'd be great if if this stock went to $38 or something, and I just made a lot of money, and I would be up for the year, and it would just be because of that one situation where um, I was able to not only capitalize on my long call here, but also capitalize on my 100 shares. There was nothing in the way, and like I said, I'm looking trying to get the right words, but basically, this is where the system makes money when you actually get assigned, and then the stock moves back up. And I don't want to hinder that in any way. But you guys, you could have your own rules and definitely not buy the $5 long. In fact, probably if we were to do a back test and look at the statistics, that $5 long probably is not worth it in terms of you know spending $5 every week. Probably costs more than what I'm getting from it. You know, but then there's just going to be that one time when when the stock just shoots up out of nowhere. Maybe there's a takeover bid or something, and you're just gonna. It's not going to be a huge loss or anything, but I don't like to see large drawdowns. I'm very, very conservative. So that's why I do it. Okay. I don't see any more questions. So I'm going to get ready to go ahead and end the broadcast here. I appreciate all you guys coming in here, and hopefully hit that like button. That'll help out quite a bit. So as I'm coming out here, I'd like to always say, if the P&L is not real, what else are they trying to conceal? I'll be back next week.